Welcome. Let's take a look at a few budgets for a retailer. The Bandit Company, a merchandising firm, has budgeted its activity for December according to the following information. All right, so we are dealing with a retailer, so they will not buy direct materials, rather they will buy finished products. The cash balance at December 1st was $25,000 and the retained earnings balance was $250,000. Sales at $550,000, all for cash. Budgeted depreciation for December is $30,000. Selling and administrative expenses other than depreciation expense are budgeted at $60,000 for December and are paid in cash. The invoice cost for the inventory sold is 70% of the sales price. All purchases are paid for in cash and the inventory level did not change during December. Dividends totaling $25,000 will be paid during the month. Ignore income taxes. What was the budgeted net income for December based on absorption costing? So the income statement for a retailer under absorption costing, you'll first take the sales, which were budgeted at $550,000. Then you'll subtract cost of goods sold. Now, cost of goods sold in this problem is $385,000. That is computed by taking 70% of the sales of $550,000. This is because inventory cost is 70% of the sales price for this retailer. That leaves a gross margin of $165,000. Now we need to subtract all of our operating expenses. In this problem, you'll notice that you're given depreciation expense is $30,000 and selling and administrative expense other than depreciation is $60,000. So we'll put both of those in there. Both of the expenses are deducted to get net income. With selling and administrative expense of $60,000 and depreciation expense of $30,000, we will net out to get income of $75,000. Now that is our budgeted income for the month. Next, we'll compute what is the total of the expected cash disbursements during December. Remember, you disperse cash for various reasons, so you want to break it into a couple of parts. You want to first get your cash disbursements for purchases. So we need to figure out what were purchases during the period. What we were given about inventory is that the inventory cost for the inventory sold is 70% of the sales price. All purchases are paid for in cash, and the inventory level did not change during December. Now I've highlighted that last part of the statement because what that means is that cost of goods sold and purchases are equal. Okay, and that's given there in your bullet points. That means our purchases are equal to our cost of goods sold of 70% times $550,000 or $385,000. And again, that's because the inventory level did not change. And what that means is that they only purchased what they sold. All right, with that explanation and knowing that they paid all cash for purchases, the cash disbursements for purchases is very easy to compute in this problem. It will simply be the $385,000 of cost of goods sold. Our cash disbursements for selling and administrative expenses will only include the $60,000 of selling and administrative expense. It will not include the depreciation expense because that is a non-cash expense. So be sure to note that depreciation was given separately in this problem, and it is deducted to get net income, but it is not part of your cash disbursements. Then we want to look for any other cash disbursements that we might have that would not appear on the income statement. The only one you'll see is the dividends. The company has budgeted to pay dividends totaling $25,000. So your total cash disbursements, $385,000 plus $60,000 plus $25,000, that will be total cash disbursements of $470,000. Now, of course, this number would feed into our cash budget if we were asked to prepare one. The last thing we're asked to do in this problem is compute the budgeted balance in the retained earnings account at the end of December. So we're preparing that part of the balance sheet. And remember that retained earnings, because it's a balance sheet account, you'll start with beginning retained earnings. That was given in the first bullet point to be $250,000. You will add your budgeted income for the period, which we computed in Part A. We computed that to be $75,000. Then we will subtract our dividends. Those were given to be $25,000. So we will retain $300,000. That is our ending retained earnings at the end of December. That concludes coverage of this problem. Be sure to work other problems related to merchandising or retailers and see if you have any questions and bring them to class. I'll see you then.